Okay, welcome everybody. So, as we see Tesla stock now above all-time highs, there are many questions investors are asking. Is it going to continue to break out beyond these levels? Is it too late to buy in now? When might they do a stock split? Well, these answers, and we're going to get questions with these questions, we're going to get answers for them, and we'll do a review of each of Tesla's products for 2025. We've got the bulls here with us today. We got Tesla boomer mama, the queen, Alexandra Mertz, Jeff Lutz, also known as Mr. Incredible, the Rational Bull. And today we have James from InvestAnswers, the Analytical Bull. Welcome, everybody. Are you guys ready to have a little quick toast to celebrate all-time highs? You guys bring something?
Yeah, I got
I'm going to drink an early morning drink here. So there we go. Let's go. Toast.
I'm afraid.
5 o'clock somewhere.
Yeah. Cheers.
Cheers.
Cheers, everybody. Awesome. Okay, so let's get started with that big question everybody's asking right now, right? Stock is at all-time high. Is it too late? Is it too high at this point? Let's kick it off with you, James.
Yeah, there's a lot to digest. We had a very big move in a very short window of time, and I've got a couple of slides I can share too, if you like.
Yeah.
That really put everything in perspective as to where we've come from so fast. And one of the things I often say is risk happens fast. And we saw that ever since November 5th. No idea what happened on November 5th, but it had a huge impact on the stock, obviously. But if I could pop up a couple of slides, one of the things that really is so important as our new Tesla Bulls logo, forget this. This is the question that everybody is asking. What has happened and are we too late? And I'd love, again, for you all to, these are just things that I hear over 100 times a day. All the people, at least in my community, tend to be heavy crypto. They don't do stocks. But some did take the dip in the Tesla pool during the Tesla bear, which was quite incredible. But the question is, where do we go next? So I got a couple of thoughts on that, and I'd like to get some feedback from you. First of all, I always try and analyze human emotions and how people make decisions. And trying to figure out exactly what is controlling the Tesla retail investor's brain. Is it the reptilian brain, the limbic, or the neocortex? And the same question as well for institutional investors. What's controlling their brain? I have a funny feeling it's either red or yellow. Very few are making rational decisions. The only people that make rational decisions are people that spend thousands of hours studying this asset, because it's very complex. It truly is a Wayne Gretzky stock where you got to play where the puck is going to be, and very few people can envision the future. That's the first thing. Second thing,
before you move on though, come back there, because yes, there's those three areas of the brain, but the reptilian is the most powerful, and then the emotional is even the next powerful. So even those people who do study the stock like crazy with the analytical stuff, sometimes you don't know why you're being overtaken. You know, the emotion takes you over, right?
Well, it's actually more complex than that. Because I'm obsessed with how the human mind works, because it's important not only for us to know our blind spots, but also know our strengths and weaknesses, etc., and why people do what they do and how they react. But I've been working on a piece actually with a guy called Dr. Sanjay, and I think we are close to coming to the conclusion that greed is far more powerful than fear, which means the limbic brain is more powerful than the reptilian brain, which is very bizarre.
Are you sure about this?
Well, when it comes to stocks, I can give you an example.
Most people are fear-driven. Yeah.
So people get more upset when they leave money on the table than they do taking a loss. So the simple example is imagine Tesla goes from 100 to 200, and then the investor sells. Then it goes to 300. They are more upset missing out on the 200 to 300 jump than they are on Tesla going from 200 back to 100. That's my conclusion. It's very crude, but I have a funny feeling I'm pretty right, and I'm trying to prove that out. Thoughts, team?
Now, when I first read this slide, I read and it says instinctual or dinosaur. I thought it said institutional or dinosaur when I first read it. That's right. My brain's been stuck on that the whole time. But in general, yeah, I mean, agreed. There's this whole thing of like, where does it go? Where does it go from here? And the conversation I come back to is, if the business was stagnant, like when it first got to that 414 in 2021, the business that Tesla was in 2021 versus the business it is today, versus the business it's going to be over the next, 3 to 5 years are completely different things. And if it was static, I would say, okay, this is just pure, valuation expansion and so forth. But this is why I think why I think fundamentals in analyzing what the business is doing, what they're about to do, and where they're about to disrupt, trumps doing anything over, what has been the traditional forward PE on this stock. So this business is too dynamic to use those stagnant metrics. And I really think you've got to really understand and study the business. And it does take those many hours of studying to do it, or, find sources you trust and crowdsource those sources and zero into them.
Excellent. Yeah. Very well said. There's another little slide, if I can pop it up, because, the big topic that everybody's asking is what happens next? We've broached the all-time high, 3 years of kind of sideways chop. This is a chart, actually, the first time I was on your show, Herbert, back in 2023, believe it or not, we spoke about seasonality. And I spoke about the 4-year chop, the 4-year cycle, very similar to Bitcoin. Not any different, but that's what happens. You got the 2010 to 2013 chop, and then Rampage at 10x. Approximately. It was actually 13, but let's not ruin a good story of the facts. Then the 2015 to 2019 chop, call it 4 or 5 years, and then a Rampage, another 10x. And then we had the 3.5-year chop from all-time high to where we are today, and we just broke out. And this is a thing in TA that's called price discovery. The question is, what happens next? I'm going to go back to seasonality. This is price discovery. This is the breakout. So we break out a new level beyond level 6. And then there's no sell signals because we're in this kind of like an air gap in a plane. But what's really, what I want to zone in on right now is monthly returns and seasonality. And you've all been around Tesla for a long time. And this is what I gather. I do this for many assets because I'm a big believer in seasonality. I know certain things will go on a rampage at certain times of the year. Q4 is always very strong for Tesla, which means the results will flow into January more often than not. But that did not happen January 2024. We got a kick in the teeth because the market was horrific. But the most important thing from this pattern is it's the easy way to understand the colors. If you imagine 2013, we had an average monthly return for 12 months of 13.31%. In 2020, average monthly return of 21.5%. When you take into account compounding, that's how you get the 10x in 1 year. It's insane. My question to everybody here on the panel, what happens in 2025 or 2026? Are we going to get another one of these rampages where we get another 10x? That's what everybody wants to know. That's what the retail investor wants to know. Are they too late? Are they having FOMO? Should they get in now, or is it done?
Well, let me add my view. I mean, this is by far not done, and we're only at the beginning. I think we just caught up with all the delays we were having. I mean, there were lots of reasons for these delays, including the former administration, but we're now getting to levels where the next episodes are going to happen. I don't think that Robotaxi is priced in here. I don't think the bot is priced in here. I don't even think that the cheaper Tesla is priced in here yet. I think this is just catching up at the moment, and there is much more to come next year and even more so the year after. My theory about changing of buckets from the consumer discretionary to the tech bucket, that's going to be the same type of accelerator, if not bigger, than the S&P inclusion in 2020.
Yeah.
I already spoke.
Okay. Well, sorry.
But do you believe it?
I'm not trying to be repetitive. Oh yeah, go ahead.
Do you look at seasonality? Do you believe in it? We know Q4 is going to be impressive. Potentially, are they going to break 1.8 million vehicles? Will there be some more surprises from the mega pack business? Is there going to be a bigger uptake in FSD? What do you expect for Q4?
Yeah, I believe in seasonality for macro, and I believe in seasonality as it relates to certain industries and, when their product is bought and sold. But with Tesla, it looks like they're going through this transformation right in front of our eyes in terms of where the sources of revenue are coming from. And this is happening when everybody does a but this and but that when they go through the earnings. and they're trying to make excuses for everything. For example, in the last earnings, when they surprised on gross margins, they surprised on EPS, and it was like, well, but this, well, but that. Everything you're saying but to is like, the Cybertruck FSD revenue, like this is all like their forward business and what they're doing going forward. But regulatory credits, well, look what's happening in the rest of the industry. The rest of the industry is capitulating on EV because they can't figure out how to build it profitably, and they figure out that they can write a check in terms of these regulatory credits and hand it over and lose less money than actually investing and having an R&D effort and a factory. So these are like, I always look to like what's happening fundamentally in the future. And what's happening is people still want EVs because they're more superior product and value per dollar. And that's showing itself now. We're in that transition right now. And then I look at the sources of revenue are changing. So the traditional financial metrics and the traditional way of looking at this stuff is going to be more difficult to do unless you're taking into account where the new sources of revenue are coming from and what are the probabilities of those things hitting. And finally, I just go back to I struggle with these amalgamation efforts where there's something like FactSet or Bloomberg or whatever. I mean, it's a data point and I put some weight on it, but I'm starting to put less and less weight on it because I really start to question, well, who's making these inputs? What level of detail are they actually studying these companies, studying this company, and understanding where its future sources of revenue and earnings are coming from? I question that greatly. And I also do not see the metrics that really go into accuracy and compliance and how accurate have these predictions actually been. So what I look at and say, well, what can Tesla do in the next year? I'm not a stock price predictor, but when I look at the business and what it's doing, they've reinvented themselves for the next 10x, and the only question is time horizon.
Yeah, can I add to that, which is, I do think that we're still at the very beginning. So when you take a look at that chart that you put together, right, it's kind of flat for many years, and then it breaks out. We're just at the very beginning. So are we already too high? Well, we're just at the very beginning. And so what has happened in the last 3 years is the story and the earnings for the main business, which is automotive, has fallen significantly, right? We were expecting before 40 to 50% growth rate. Now we were back to negative growth rate. But for this year, they shored that business up. And if your main business line has been shored up, and now you're talking about 20 to 30% growth with additional new markets and TAMs and so forth, that allows for people to now start to realize that these other big events, big milestones are about to come. So I like this. I've got this, a slide from Pagey. I'm not going to show the slide, but I'm going to read out what he said of the price of the stock today compared to where it was 3 years ago. Since then, here's all the things that Tesla's done on the fundamental business side, right? They've now sold since then 4 times more in vehicles. They deployed more than 2 times in energy. There's 3 times in services revenue, more than 3 times in deployed superchargers, 2 times in total revenue, 100 times X improvement in FSD. And, right now we think that the FSD take rate is going to start to skyrocket based on how great FSD 13 is. And there's other things as well. Now, obviously you can't do that. It's all about the future and the growth rate for the future. But, we're just caught up to where maybe when we hit all-time high at that time, it was definitely frothy and it was overtaken. Even Elon himself, the stock is too high. And then the interest rates were cut. We went to a recession kind of period. Deservedly, the stock fell. Now we're up here. Now, is it overpriced at this point? I think we're basically where we are priced at now. And what Alexandra said earlier, which is we're still at the beginning. Now that we're here, when do we start seeing earnings come in for the new vehicles? When do we see earnings come in for FSD and Robotaxi? When do we see earnings for the bot? These will all come in 1 year from now or 2 years from now. And so in 2025, there will be people recognizing those earnings forward, bring it down to what we should expect in 2025. So I think we're still at the very beginning.
There's a couple of other items that would dovetail into exactly what you said. If I can pop up this slide, the question really is, what is causing this stock performance? We know the lawfare has gone out the window with the change in the regime, etc. We've got the breakout of all-time high into price discovery. Alexander, questions for you. Is it window dressing? Is it institutions underweight and they're scrambling? Or is it retail FOMO? I have data on all of those points. Or are people pivoting? Is it the new NVIDIA AI play? This is the best analysts will tell you this is the best AI play on the planet. Or is the FSD penny dropping? I.e., people realize they're on the cusp of autonomy here. If you look at the Chuck Cook videos, mind-blowing. Or is it Robotaxi stumbling in the woods? Sorry, the Optimus stumbling in the woods or Robotaxi. There's so much all coming at the same time. It is kind of ridiculous. And again, per this, institutions still underweight. I think they're playing catch up very fast. But this was kind of stunning yesterday. We had this breakout from Kobasi, I think it was. They saw yesterday 1,500 posts per hour about 420 Tesla on X. 1,500. This is way beyond anything that's ever happened in history. And this drives a huge amount of retail FOMO as well. Again, record high on X, record usership, record posting on Tesla. So again, is it institutions? Is it retail? What do you all think?
So at the moment, I do believe institutions are entering. We have seen it actually go up to 51% now. On the FinTel. The problem with institutional reporting is that there are different reportings. For example, the NASDAQ website does not take into account fund managers under 100 million. So those funds are excluded. And I mean, while each fund is not a lot, there are a lot of funds under 100 million. So the NASDAQ numbers are a bit lower than what they should be. FinTel pretends they're taking them into account, but I mean, it's always a gamble with data in the finance world. But anyway, so FinTel is currently at 51% institutions, which is up considerably. So your chart is right. We have now over 50%, but we're still way lower than everybody else. And Tesla is still underweight in a lot of funds that don't have to track exactly their benchmark, and even more so on mutual funds. So on mutual funds, we come to the next topic, which is window dressing. Mutual funds don't have to publish. Sorry about my noise. Mutual funds don't have to publish their portfolios daily. They publish once at the quarter end, and you have no idea when they bought what you can see then. And so there are a lot of mutual funds that were not there yet end of September. Those numbers we have, but I promise you they will be there end of December. Now, have they bought or will they buy? I think they actually thought 380 was too expensive and 400 was too expensive and 420 is too expensive. So they will have to find, they have to look really hard to find for the point of entry. And there may be some that are going to gamble it until the last day. Now, will all of these funds hold it the first week of January? Probably not. So we may see some correction at the beginning of January just because there are lots of people who don't want to be in the Tesla stock, but it's going to be fewer and fewer. So at the moment on your list, I do believe that institutions coming back, window dressing, what I just explained, and obviously FOMO from retail investors are real at the moment. All the other points, the revenue from bots, the future revenue from Shanghai megafactories, and obviously the new car models and all that, they are not in there I wouldn't say to the slightest, but by far not to their extent. So that all that is yet to come. All that is yet to come. And then I'm always missing on your list the bucket change. But I mean, again, I expect that to be in 2026.
The bucket list. I love that. Let's go. Should we
I'll
jump?
I'll just quickly add in, like, what do you think is driving this? First off, Tesla put a floor under their fundamental earnings performance in Q3. They surprised on gross margins. They surprised on earnings. In the street, in their 90-day, checkup, they value that pretty significantly. Alexander, I think, described what's going on from a window dressing perspective. I think institutions are just drawing. They do simple things. They're looking at, okay, there's no daylight right now between Elon, and the White House. There's zero daylight. And so, and not only just domestically in the US, but this carries great weight globally as well. And that is a huge factor. I don't think you bet against that. It's kind of like the whole Fed put thing. Like, do you bet against, when the Fed is reducing rates, do you bet into that? Do you short things? No. Also, same thing when they're actually increasing rates. So I think there's a little bit of a White House or Elon put with that. And then finally, I think there's Tesla is executing in terms of these future businesses coming together. I think the We Robot event showed like what it could look like when it's actually they gave you a vision of end state. They actually showed you end state in a miniaturized fashion, and now what we're getting are incremental updates showing us getting to end state. Now you're getting into your car and you press one button and it takes you from wherever you're parked to the final destination into a part. Like we saw a vision of the future they showed us end state, and now we're getting closer and closer to that. I don't know how many of the actual analysts have actually seen this and experienced it themselves. It's very few. And I think it would behoove them to get more involved in FSD, trying it out for themselves, and then going to the factory, bringing somebody to the factory with you if you're an analyst that can help you ask the right questions, and finally really understanding what's going on with the bot program and how truly differentiated it is. Because there's some signs that I'm seeing from my experience in tech and building product that I'm seeing with Optimus now that are stunning to me, and things that I used to question in the past. I'm like, is this really a mass production, high volume solution you can put in a factory? And they're slowly like knocking off a lot of those questions that were in my mind.
Can you give us one or two of those examples, Jeff? Because you've intrigued me. What do you see that nobody else sees?
Well, one is the relative improvement in dexterity is so important in a factory environment, because there are tolerances in all the moves in terms of the accuracy, and then there's a speed element involved. And so if the speed never got there, but the tolerances were good, I'd be like, okay, well, this is good. This can replace some things in the factory, but I'm going to need a bunch of them because they're slow. Well, it looks like it's not slow. It looks like the dexterity is there and the speed is there. Now, they obviously have more work to do and more development work, but we are seeing demonstrations of the dexterity. The two things that stood out for me were the tennis ball catch and the movement across the body and the movement, in the hand, and then the walking down the hill and catching itself. And then everybody online is like, was it teller operated or was it not? That is the wrong question. That is the wrong question. Can you build something that could actually be a mass production solution and replace human labor? And the other question is, can it replace existing capital assets that are on the line that are traditionally bought as fixed assets and not as movable? And now can they become more fungible and move those operations to the bot? That I don't think is actually being properly even priced in as well. Everybody's just looking at the human labor element of it.
Want to add that, so just to clarify, I think that FSD version 13 and the bot are obviously moving forward, and they're surprising. I don't think it had any impact to the stock rise this last month or two. It is basically all what you were saying, James, which is FOMO and institutionals trying to get in at this point. So let me share this, why I think this way. I can't remember who it was. Somebody on X, fantastic post on X, shared this, which is, let's take a look at Tesla stock as it goes through and look at it. It's pretty well flat. When did it make the pop, guys? When did it make this pop?
November 5th.
What happened November 5? Well, I don't know. Maybe Alexander and Jeff weren't paying attention.
We know. We know. We're our heads, Jeff. We're our heads.
And good thing the right person was elected.
Right.
That's November 5th, an election occurred.
Can we say that, Herbert? Herbert, can you say that? Good thing a right
say whatever we want.
November 5th, an election
Everybody
occurred.
has an opinion. Sorry, Herbert.
And the stock rose up very high since then, right? Now, when did FSC 13 released? November 30th, right here, Saturday. okay, stock went up, but it was already on its way up. Like it wasn't. I don't think that moved. Or the bot demo. These things are not the reasons why the stock went up. It just started from this big event, and then people realizing we need to get in. And as it rose, everybody goes, "Oh shit, gotta get in."
Herbert,
now.
I
And it
didn't
keeps
say
rising.
that's why the
Simple.
stock's going up.
I didn't say that.
I
didn't
said
say- I'm
these
not
are the
saying to
things
you.
that I'm
Yep.
noticing.
Yep.
Yeah.
Understood. We were asking the question of what do you think, and I'm just answering it, which is what James said. Yeah.
And I think the thing that we definitely, Wall Street and the market and retail investors don't understand is what I always refer to as exponentiality. It's very hard to wrap your head around making something, manufacturing Optimus at 10,000. I think Elon said this in a board, one of the shareholder meetings or earnings calls. Make it for 10 grand, sell it for 20 grand, and it does $100,000 of work a year at least. Okay, that's exponentiality that none of us can fathom. And he said as well, I think Tesla could make $1 trillion in profit a year on this, PE of 20. That's a $20 trillion value for this product. But the important thing to stress is, and double down on, is what Jeff said. The pace of development is so rapid. Like that falling down the hill, I would have fallen on my butt probably. That thing didn't. And I think it was Hansi Nelson said it on Herbert on your channel. Every single limb, hip, elbow, head, everything moved at the same time through neural nets. They're there, like catching tennis balls and falling down hills and catching themselves. It is absolutely staggering to see. So thank you for sharing that. The question is, when Optimus at scale? That's going to be a big one. And then the Robotaxi is revolutionizing transport, which in itself is a massive opportunity that, again, nobody's ready for. Again, buying a car maybe for $30,000, that makes you $30,000 a year. That only cost Tesla $15,000 to make. The Robotaxi, it's exponential math. And, you know, Stern and Herbert, we've modeled this. And the numbers get really wild. like they're so wild, it's almost embarrassing to share them because you look like an idiot. But when you back into them with logic, they're very believable. So
yeah, I will say that I've been following all of the institutional analysts, and they're every day you get 2 or 3 of them come out and say they've got a new price target. And then they'll say, you know, at first it was 300s. Now they're, having to go up to the 400 number. And when you see the reasons, it's hilarious, of course. It's got nothing to do with what actually happened. But they are saying autonomy, right? And they're going, okay, I think that's the thing. And then only just a few are saying the bot, right? Just a few at this point. So I still don't think that any of them really put any prices at all in autonomy or the bot today, despite us all seeing this happening. I think retail sees this, and that's why we invest in it. But these guys are just following the numbers, and they're not doing it because of any of those things. They're almost being dragged in to try to say it. Like, they really don't want to say it because we've heard some institutional analysts explain over and over and over again, we don't want to project what the future is. We just want to tell you what it is today and how we only put in a spreadsheet only once we've got an actual number in.
And part of that goes with too, like, how are they measured? Are they measured on single year performance? Are they measured on, and does they even go back and look at what were their predictions and what was the accuracy of their predictions? I know there's tip ranks and there's things like that, but it's almost like every time I see one of these folks on TV, I'd like to have a chyron below and understand, like, all right, you're talking about a name. What have you said and how accurate has it been in terms of what you said? That would be an interesting thing to have.
Oh, that's going to happen soon, eh? With AI coming down. That's going to happen to me and you too.
Real time. Sure. I'd love it. We should have it. It's accountability.
And I think this also all dovetails back into, well, Alexandra, you have anything to add to our rambling about?
No rambling. I think you all said very valid stuff.
Yeah, there's one quick slide here, and it goes back to the unassailable lead. And I don't think Wall Street also understand the amount of investment that Elon Musk is making, not just Tesla, Elon Musk in AI, across all the businesses, this synergy between the businesses and how it's going to be impossible for anybody to ever catch up. I think this is worth talking to as well. This unassailable lead, the Silicon Valley venture capitalists, which are now apparently Mark Andreessen is basically living in Mar-a-Lago. So the whole,
Yeah.
all the top capital allocators on the planet are all hanging out with you know who. And the top VCs are frothing at the mouth. They're ditching their other stocks. They're FOMOing into Tesla earlier than expected. Wall Street has no clue what AI means. And some of them are beginning to flip the script because they're expecting a Model 2. But I think we should spend a few seconds talking on this and why Elon is superhuman and how others now recognize exactly what's going down.
Before you play that, I have a question. There was at one moment the rumor that NVIDIA was going to participate in that $6 billion that XAI just closed. Did they? Do we have confirmation on that? Because if we did, I think that is the most bullish sign ever.
Yeah, we have confirmation that happened. Absolutely.
NVIDIA invested in XI?
Oh, I'm
Yes.
sorry. I
Did
thought you
NVIDIA
were
invest?
responding. No, I don't know.
I know that X closed it, but I didn't have confirmation whether NVIDIA did invest in it or not. But I mean, we'll try to find out.
You know, there's another way for NVIDIA to invest in XAI. It would just be on the pricing of the transaction. So I'd be interested to see if, I don't know the answer to your question, Alexander. Be interesting to see, though. We'll never know this, but yeah, there's another way for them to invest.
He gets them, and the fact that he gets them, because obviously so many other people want them, and Elon gets them.
Yeah, exactly. Where are you in the sequence, and what are you paying? Are like right now the two highest order bits for this, and it looks like he ranks very high in this. I listened to this story, James, and to me the big takeaway was around utilization of these assets, and the fact that it helped NVIDIA. Like it opened the door for NVIDIA. Because what Elon proved is that you could go beyond the cluster size of 32,000 of these things, and you could chain 100,000 together. You can chain 200,000, and now all of a sudden he's talking about doing 1 million unit. And what does that do? Like once somebody goes through that discovery, shows how to do it, and also you hear Jensen making an example of Elon and his team, calling them superhuman. How did they bring it up this quick? This is all good for NVIDIA. If NVIDIA gets people that can now go beyond the cluster size of 32K, go to bigger clusters, guess what? They're going to buy more. If NVIDIA can show the example of what Elon and XAI and Tesla did in terms of bring up time, others are going to bring their clusters up faster, and therefore they're going to pull that inventory faster from NVIDIA and then order the next round quicker. So this is very symbiotic between the two. Elon is a huge fan of Jensen. Jensen is probably even a 10 times bigger fan of Elon because he is the prototypical customer. He buys what he says he's going to buy. He pulls the inventory when he says he's going to pull it. He pays an expedite fee to get it earlier. By the way, I think there's probably something tied to that deal in terms of bringing up that system rapidly as well, because the quicker that NVIDIA gets feedback, it's the better for them. But yeah, this is a very symbiotic relationship. Elon just expanded NVIDIA's TAM by his behaviors and results, what he's done with these.
And most importantly, fill that 6-month air gap of orders too that they were facing because of the Blackwell delay, which is very important. So yeah, it's more symbiotic. And let's not forget Michael Dell and Larry Ellison and all the people that are in cahoots with all of this. Everybody's working together, and these are the big power players. So
do we want to watch the 2-minute clip here?
I don't have a clip. It's just a static shot.
I do. But I do have it. Yeah.
I think Jeff summed very well. It's okay. I don't have a clip for this one.
I do. I have the 2-minute clip ready to go. Yeah. I mean, basically, this guy, an investor in XAI, and he explains what Elon did and why they're so far ahead. Let's listen to him, I guess. Yeah, 2 minutes.
Compute to work, the GPUs need to work together for AI. And no one thought it was possible to connect more than 30,000 of these with today's technology. From public reports, Elon, as he so often does, focused deeply on this, thought about it from first principles, how long it should take, the way it should be done. And he came up with a very, very different way of designing a data center. And he was able to make over 100,000 GPUs coherent. No one thought it was possible. If I was a last minute ad for this, but I would have said there were all these articles that were being published in the summer saying that no one believed he was going to be able to do it. It was hype. It was, ridiculousness. And that was coming. The reason the reporters felt comfortable writing those silly stories is because engineers at Meta and Google and other firms were saying, we can't do it. There's no way he can do it. He did it. And I think the world really only believed it when, Jensen did that podcast, I think with, wasn't it with Gerstner?
It might have been with Gerstner.
Yeah, I think it was with Gerstner, and said what Elon did was superhuman. No one else could have done it. And I actually think you can argue that Elon doing that in a lot of ways kind of saved NVIDIA from a tough 6-month period when Blackwell was delayed, because everyone who was waiting for Blackwell and thought it was impossible to make 100,000 hoppers coherent rushed out and bought a lot of hoppers to try and do it themselves. Now we will see if someone else is able to do it. It was really, really hard. No one else thought it was possible. And as a result of that, Grok 3 is in trading now on this giant Colossus supercomputer, the biggest in the world, 100,000 GPUs.
In Memphis. At the old Electrolux factory, and they're putting a lot of energy in there, a lot of natural gas, a lot of
a dingy Electrolux factory. Yep. But you have not had a real test of scaling laws for training, arguably since GPT-4. And this will be the first test. And if scaling laws for training hold, Grok 3 should be a significant advance in the state of the art.
Wow, we are all in the All In podcast. We have the second best podcast in the world. We're part of it.
That's great. And I really still hope that Tesla will consider investing in XAI. Maybe I should update where we are now because we're nowhere. So we had 2 times the question in earnings calls to Elon, and Elon seemed to be very favorable to it, but kicked it down the road to the board, said this is not my decision, this is the board's decision. Given how the board tackled this year's shareholder meeting, I do believe it would mean that the board would mission a special committee of 1 or 2 or 3 people to investigate at what price this is correct, because pricing AI companies is all over the place, right? Not all of them are public, or very few of them are public, and so it's a big question. How would you price them? None of them are profitable so far, or at least not that we know, and so that special committee would have a real task. So what we did was we did a letter to the board in August that was signed by, if I recall it right, 1,300 Tesla shareholders with about 40 million stock, or some number like that. Forgive me if it's not exactly correct. And sent that to the board in August, missioning them to put everything in place to make this possible, meaning a special committee. If the special committee would then favor this investment at a certain price, it would become a shareholder vote. Now, the next year shareholder vote is going to be in June, if nothing else changes. We've learned as Tesla shareholders that dates of shareholder meetings mean nothing. So we'll just have to see what is next year. But
Alexandra,
but they could do an extraordinary shareholder.
You have to push really hard.
Is not in person.
You have to push hard. Every 3 months matters. Every 3 months matters in AI. So
we're depending on you.
Pushing very hard. Is anybody else pushing as hard as I am?
No. We need you to push, please.
It's all on you.
The market cap goes up by 10 billion every quarter at least.
Thank you, Jeff.
Yeah.
Exactly.
No, I mean,
I think
this could be more.
Put it on.
Is it hyperbole to say that this could be more important, having a piece of XAI, than even his debacle with Delaware?
Oh, it is more important. It is more important. I mean, Delaware, we're not done yet. I don't want to go back into that. There's still 4 or 5 cases pending. But Delaware, in the worst of cases, costs us a couple of $1 billion, right? I'm not saying I love it. I hate it. An investment in XI is a completely different amplitude. Of course, we're going to fight in Delaware and make sure we don't lose money. But it's one of those things that, if it happens, it happens. And I'm still very hopeful that it doesn't happen. But XI is a completely other game changer, because having 5% of that company, would then have to be valued every 3 months, and it would get into the earnings of Tesla. But it could obviously be a real turbo to Tesla's earnings.
I tell you, XAI was valued.
Yeah, to your point, I think you brought this. I know you're talking about the official letter, Alexander, but I think this was raised earlier by the shareholders, and maybe you publicly months earlier. And XAI, I think in the beginning of the year, at an $18 billion valuation, and I'm hearing it's going for It's going for 75 billion in the first quarter potentially.
Yeah, and so
Exactly.
people are
We're long
saying
on
that why
yeah.
should
and even 75, I hear higher than that.
Yeah.
people saying why should Tesla invest in XAI? They're just an LLM. No, they are the single. They have the largest supercomputer in the world, right? With 100,000 Hopper chips now. It's going to be 200,000 in the next 3 months. 100,000 is already one of the largest supercomputers in the world. And then they've got the what is it, Jeff? B200s? Yeah.
Yeah, a lot of the B200s. It's the integration. Yeah.
And that's going to be, then they're going to have a goal to be 1 million chips. But the reason why Tesla matters, and this is the thing that I just discovered last month that shocked me, is that Tesla is using the supercomputer that is in Memphis owned by XAI for FSD. So we've got to own XAI for the supercomputer build out more than just the LLM possibility, which is, by the way, people are underestimating the value of that.
Also, RIP ChatGPT and Microsoft. I do believe XAI will destroy them. And that's Elon's goal. That's the way he likes to win. He's going after Sam Altman big time.
Exactly.
There would be no other
And the other
example
thing is
of somebody
people
owning
say-
both of these. And one
I agree.
the integration piece of it.
And when people say, why do we need that? Why do we need Bitcoin? Right? It's the same reasoning. I'm not a huge fan of Bitcoin. Don't come after me, James. Don't, please. But if you invest in Bitcoin because you consider that that's a better store of value, that's a better store of value than the cash laying around. How much are we now? 39 billion running around. So if that is an investment in XAI is probably much better than having the cash lying around as well, right? And so you have to consider what to do with your money, and if you can't spend it, if there is no organic growth to be financed, well, what do? They decided to go in Bitcoin. I think they may as well decide to put 5 billion into XAI.
Good point.
James, did you see that video that I did with CERN? And he talked about Bitcoin and Tesla. Tesla should be investing in Bitcoin. Yeah.
Yeah. Well, they do, and they did, and they sold.
Yeah.
And I think the problem we have there is Tesla's simply too big right now. And when you get to a market cap above $1 trillion, allocation to Bitcoin becomes kind of less relevant. So they do have a piece on the balance sheet, but it's far too little to move the needle. There's only one company that can do that right now. That's MicroStrategy. which has also been a game changer. Winning assets, everybody. But there's another cool little point here I do want to bring up as well, just to jog some ideas. If you could share that slide 13. This was buzzing around the internet yesterday, and everybody's pinging us. You probably heard this too, stock split. So a couple of things. I trade around stock splits. I watch them religiously. I am pretty good at anticipating them. I just want people to understand we're probably not going to see a stock split in 2025. But if we do, it'll probably happen in August because that's when they like to split. But it needs to be at least $800 for that to happen. Maybe 600 for a 2-for-1. But I just want to put that to sleep right now. Maybe 2026. Do not invest in Tesla today for a stock split.
Yeah, so what's the point? Like, what's the reason for a company to even split the stock? I mean, Berkshire Hathaway,
liquidity and stock-based compensation for employees. It's very difficult to chop up $1,000 stocks, but a big part of it is stock-based compensation and liquidity.
And it means nothing anyways for the stockholder, us. I mean, it doesn't do anything to that. It's not a catalyst for the stock, so who cares?
It actually does, because when stocks are cheaper, retail investors are more likely to buy. So it actually does have an impact on liquidity. It does bring more money in. Humans, again, going back to the reptile brain, they're reticent to spend $1,000 in a stock, but they might spend 300. So 3-for-1 stock split opens up that liquidity. I know it sounds really crude and hard to believe.
It's fractional. With fractional stock, I think it's ridiculous. But anyway, I agree with you. This is not going to happen soon. This is going to happen when we're closer to 700-800.
Exactly.
Well, if it's going to happen when we're closer to 700, 800, it might happen soon, Alexandra.
Yeah. Well, your colleague Herbert, who was on your channel, I can't remember his name, an Asian fellow. He said we'd hit 650 by Feb. What was that the number?
Yeah,
Brian.
Brian. Oh yeah, Brian is bullish.
But he's got very believable logic that attaches to why he thinks these numbers.
He is top
And
notch.
actually, the
Did you
person
see those calls that are being bought, James? Did you see those calls that are being bought?
Out of the money,
At
way
these
out of the money.
levels, 700, 800, 840. This is crazy stuff.
That's crazy. Yeah. If you don't believe Brian Wang, what you should believe is AJ. So AJ is a real Tesla retail analyst, and I did a show with him, and he showed you, because the reason why you should believe him, or more likely to believe him, is because his number of target of $600, his price forecast for Tesla is $600 by the end of 2025. He based that on earnings.
Yeah.
Now, Jeff, I know you have a lot to say about these forward PE ratios. Do you want to talk about that? But this earnings is calculated from the bottom up. Every single business Tesla is doing that AJ did versus, these analysts who come up with these forecasts for earnings based on just auto. Do you want to say something about that?
No, I agree with you, Herbert. I'm an advocate when there's a thoughtful analyst that goes and does bottoms up and really understands the business, what the company's building, understands the technology. You'll tend to get better output from that. What I don't understand, and nobody ever goes back and checks on the accuracy and how good were these, go read the Bloomberg terminal, tell me what it says, or FactSet, is who's inputting this data? Who are these nameless, faceless people? Okay, then let's get the names. Okay, we got them. How accurate are they actually, and do they actually understand the business that they're putting, these numbers towards? And how is this measured? Are the worst people knocked out every year and they're not included in FactSet? Like, how does this actually work? And so I am an advocate of when someone like a Brian Wang or AJ comes on and goes through their bottoms up model, goes through their assumptions, and they're astute and they're studying the business. They understand the tech, which both of them have espoused in their posts and their online behavior. I think it's a signal to noise thing. And the question is, where can you get more signal? And much like what we're seeing with what's happening with the media, where we were only getting our media from one source, and now we're like, okay, this crowdsourced thing, this real time thing, citizen journal. There's something there. May not be everything, but there's something there. I think the same thing is going in terms of these forward valuations and how to value a company. Who do you listen to? Where do you get input from? Who actually understands how that company develops product, how they build a product in their factories, how their supply chains work? How does FSD really work? And when is the timeline? What's a realistic? How does it actually compare to other existing systems out there? And I think what's going to happen in the future is you're going to be crowdsourcing a little bit from more multiple inputs versus like, what did the Bloomberg terminal tell me?
Yeah, let me show you a stunning.
I agree. Let me maybe just add one little thing. So just at the beginning of our show, Dane Ives published that he's seeing Tesla at 625 end of 2025. Now, I think Dan did more homework than others. I'm not saying he's absolutely flawless, but I mean, that's only us, right? Us retail investors. But
he's out ahead.
I mean, he has been right. Exactly. He has been right so much more than others. So 625 in a year is a bold statement. That is a bold statement. That is, that's 50% up from now.
Yeah, let me show you mathematically how we get there very easily. Can you show that slide for 1 second, Herbert?
Nice. This one? No, you're back to this.
This goes back to what we started at with. The average return per month for Tesla since 2010 is 4.32% per month. To go from $420 to $600, you need a compound monthly return of only 3.12% for 12 months. So it may sound outrageous to get to 600 by the end of next year, but it's historically, it's a no-brainer for it to reach that, because we're not in the chopsolidation period. We're moving into the rampage period. And that's what people need to understand. So easy reach. I sound like a hyperbull right now, but it's just numbers. That's all we do. So
those Bloomberg readers are going to call you a Uberbull, but that's just my name.
Yeah, sometimes I hear my words parroted back from those people, but it's good. It's funny how retail investors like us are having an influence. It's quite remarkable. It's a great time to be alive. And shout out to all the retail investors that got into Tesla over the beautiful stacking period we had since late 2022. It was a
Yeah,
miracle.
I'd really like us to explore further whether or not the retail investors do have power, do they have influence? So I think, Alexander, you have said, right, that Tesla is the single largest retail presence, even more than GameStop did. Is that true?
GameStop, I don't know, because those are the little ones. The GameStop, I think they had a lot of retail.
Stop. Yeah.
But I mean, I'm talking about mega caps, and they're by far, if I remember right, GM has 85% institutions, which boggles my mind. I mean, does anybody of these people ever do any homework? I can't believe it. And that's what they're catering to, right? When they do stock buyback, that's who they're catering to. This is not about a strategy for a car company, how to be there in 3 or 5 or 10 years. This is about, I got my stockholders and they want stock return, and let's do a buyback because that's the cheapest. Well, cheapest is not the right way, but that's the easiest way to do it. So yes, we were in the majority. I think that really helped us for the votes. We're losing that majority, and we're going to lose it. We can't just sit there and hope that we remain at 50%, because that's just an illusion. I mean, if big money comes in and if big money needs Tesla, and if I'm right that Tesla is going to get out of the consumer discretionary bucket to go into the tech bucket, then it's going to be even more so, just because all those tech ETFs will have to buy. And so it is just what it is. And there is so much to do. But that jump from the current 51% to the 75, 80%, where we should be, where Tesla should be, this is going to be a major driver of the stock price. The amounts that this is going to suck out of shares. So people say, oh, but retail is not selling. Well, it's not retail that's selling them. It's market makers that are going to sell them. So this is going to suck the liquidity out of the trading market, which will bring the price higher and higher and higher and higher.
Yes,
so there is no doubt in my mind that retail will hold. More the stock goes up, more retail will hold. And I mean, I'll hear some of you saying, oh, but I need my money for retirement. Sure, get your money for retirement. But the most of the retail investors are going to hold while the stock is going up. If they held from 100 to 400, believe me, they're going to hold from 400 to 1,000 or 2,000. There's no doubt in my mind.
Exactly. And pop that slide up one more time, because that dovetails perfectly into what Alexander said about the levels. So the question is, what is Tesla most like? Are they most like Google or Meta or Apple? Because you can see here the average of all the other big Mag 7 companies, Microsoft, Apple, Google, Amazon, Nvidia, Meta, they're all around 78%. That's the average number. Tesla's just over 50%.
In the tech bucket. In the tech bucket. I tell you,
Exactly.
that is going to be, nobody talks about that. I'm going to hammer it for the next 12 months, because that is going to be such a huge event. And we have to press those MSCI and S&P guys, because they don't want to do it. They don't want to do it. And currently they have the excuse of saying, oh, but at the moment, 90% of revenues are coming from car sales. Yes. But you will see as soon as this starts to shift, as soon as energy grows, and then obviously software as a service, then we have an argument, and then we can push them.
I guess I have this logical thing, and I think I'm right, but maybe I'm wrong here. The point of the slide is institutions are underweight Tesla. We know that they are, right? Less than 50%, and not only are less institutions, the amount that they put in is much less than the others. But what is the strength of the retail, right? Is this the reason of the split, because of the retail so strong, like they care about Tesla much more than the others? Or is it because institutions just haven't started investing in Tesla?
I mean, the strength of retail. Oh, go ahead.
Please go ahead, Alexander, finish.
I think the strength of Tesla retail is how organized we are. There is no other retail community that is as informed and as organized as the Tesla retail investors are. And they may not all be on X every day, but when you need the Tesla retail investors, they know how to find us, and they know how to follow instructions. I mean, I've never seen anything like this, and we've played this game now multiple times, and every time it worked. So that is and that is actually something beautiful to see, this retail shareholder activism, if it is properly used, because there are obviously also idiots out there. But if you use retail shareholder activism for the right goal, we're actually a threat to institutions. They hate this. They hate that we're so active and that we are, expressing ourselves, having these shows, being in direct dialogue with Elon reposting our stuff. This is really something they're not after. And it's one of the reasons, there are multiple reasons why they don't like Tesla as a stock, but that is certainly one of them. But they can't ignore it any further. So they know they have to do with us. But by them getting in, our weight is going to go down because they're just going to grow, right? That's just the big money that flows in that we can't do anything at it. It's going to be like a wave when it comes. And when we talk here about window dressing and institutions coming, this is nothing. We moved from 48 to 51. We moved 3%. We're going to move 30%, 25 to 30%. So this is nothing to do with what we're currently. We find this is, exciting times, but that's nothing compared to what is coming.
Wow. If you put that chart back up, I think first off, they were focused on a lot of the wrong things. Counting cars. What did Elon say on X? And all this stuff is now they're actually creating they're actually creating a different business. They've created a different business right in front of their eyes. And the speed at which it's happening is so rapid. It goes into every element. It goes into how quickly are the clusters coming up. Who's buying this many clusters and how quickly are they coming up? And then you actually look at the real world solution, the AI solution that can actually be put in a consumer's hands that somebody could actually buy and place value on. And consumers are placing $8,000 of value, $100 a month in the many hundreds of thousands already on what Tesla is doing in terms of just personal driving assistance of vehicles. But it's happening so quickly that it's going to, like Alexander said, I think it may happen pretty rapidly, because if you look at everybody on this list and you look at what is their real world AI solution that is benefiting consumers today in a meaningful way that's distinguished, a bunch of them have LLMs, okay? But nobody has these 6,000-pound objects that are now navigating through the world that will eventually be humanoid robots. And it's happening so quickly. So my short answer is they were focused on the wrong stuff, purely counting cars and worried about what somebody said politically and then doing polls of, are you upset that he said this? Versus like, holy shit, they're building a real world AI solution that's going to work, that's going to scale. It's not a prototype operation where there's 200 robotaxis. There's going to be 8 million of them out there. We better get out there and get ahead of this pretty quickly.
Well said.
Okay, well, James, thank you for putting all of this together. This is amazing. You are
I've got
best.
I've got some more talking points. If you give me 2 minutes, we'll bang them out because they're important. And then we'll do a quick recap. The future outlook is what people want to know. Model 2.5 in the first half, that seems like a lock. Brad Gerstner, he believes Robotaxi is happening in H1 2025. Optimus is insane. $20 trillion opportunity. We covered that. We won't talk about AI chip, but the big thing here was the Elon tweet. Next year, Teslas will not be parked 95% of the time. First thing. Second thing, Elon is now nearly double Bezos, which I think is fascinating. Third thing, the Tesla cars are the most American made from Sawyer Merritt and Elon Musk, which people discount. Manufacturing is being dominated globally by China. The only one company holding a candle to China is Elon Musk and Tesla. And shout out to Ross Gerbil. This is amazing. He said this only a few months ago. It says he's been dumping the stock because nobody wants cars or robots. And Gerbil's fund is down 20% since 2021. Because imagine what his fund would have done if he held his bags of Tesla instead of selling the bottom like a panic seller.
And now he bought some at 400. And now he bought some at 400 3 days ago.
He's doing the FOMO thing. Excellent. The gerbil is back. It's just, you can't make this stuff up. And people trust these people as capital allocators. They don't know what they're doing. And that's the reality. So that's it from my slides. Any thoughts on any of those topics real quick? I think this is probably most important.
I certainly don't want to give Russ any more airtime. I think that is just, let's just forget about him. I think on everything else, you're right, because, and like I said, none of those are in the 420 price. None of those.
Yep.
So let's just wait.
Good summary.
I tell people, people are saying, should I sell now? I got in at 106. Should I take profits? It's like, sell. Think about selling when we get to $2,000, or sell a covered call on a gamma squeeze. That's it. That's the end of the story.
I had a show yesterday with Nick
Yashu!
Gibbs, and Yashu's on a Yashu. Come on, man. It's gotta go.
Oh,
there he is. I think he should be on the board. Okay, kick him off. Kick Yashu out. He's obviously having fun. So I was having Nick Gibbs, and he's, he was saying that, hey, stock went up. It's going to go down. It's going to go down. And I think all of us, we don't know, right? It could go down for sure. But that's his feeling right now. It's all-time high. And I was explaining to him that I've heard, and I don't remember, you guys might remember this, some important investor, I don't know if it's Warren Buffett, said something like, never sell at the all-time high, never buy at the all-time low. Once it moves up the all-time high, it's a momentum. It's probably going to go up higher. More likely than not, it goes up higher. If it goes all-time low, don't buy yet, because its momentum is probably going to go even lower, that number. Don't just use those milestones.
Rampage coming, price discovery. That's what people need to just remember. This chart, it's not hard. The Rampage is yet to hit. 2025, 2026 will unlock so much bottom line attribution. It will make Wall Street rethink price to earnings ratios, period.
So when we meet next time, James, you think, so that's in 4 weeks, you think we're higher than now?
I think there will be, I don't want to throw a cold blanket on the party, but we will have a run up to earnings and potentially a sell off at earnings. There's still a lot of window dressing that needs to happen. So we're going to have a gentle run up. But what was really interesting yesterday, again, from a technical analysis perspective, normally when you get to an all-time high after a 3-year period, you go straight through it. That's very unusual. Normally it's resistance. We didn't see any resistance yesterday. So
it was easy like butter, right? It just
and that's very unusual to see. So right now we're actually just at that 420 mark. We're coming a little bit back down to earth, but that's because the market is weak. A lot of nervousness about maybe what JP does and other things.
And how have volumes been the last couple of days? I'm sorry, I don't check the stock price and volumes every day, but when I checked last, I didn't have the feeling there were huge volumes, right? It was just normal trading days. Because I mean, if the institutions come back from window dressing, we need higher volumes.
Mm-hmm. Simon Hill was pointing out that you can see the algorithms kick in early in the morning, and this is institutionals, and right at close. That's where the volumes are appearing.
It's a great call out.
Yeah, there was a lot of volume on the 25th of October, big volume day, 8th of November, big volume 22nd of November, big volume 5th of December. But it's been pretty quiet. It's tapering off. And we're getting into the holidays where things get a little bit quiet anyway. So it's just gentle stacking. We're not seeing extraordinary volumes right now. Compared to October, that was extraordinary.
Okay. Well, this show was extraordinary. Thank you, James. Love it when you join us. And of course, Cecil Blumer and Jeff Lutz. I'm trying to debate which one of these guys is the actual queen. Is it Jeff or is it Alexandra?
That's true.
I vote for you, Herbert.
I'm going to buy you both a crown, and we'll have to get one for James as well. James, you are the best.
I'm going to send you my pin.
I'll take it.
People love the new style as well. People are saying, Alexandra, you look fantastic. The queen is back. Yeah. And I'm the one honored to be with you guys. I love hanging out with you guys. And I learned so much from each one of you. And Herbert, you're a machine. Alexandra, I love everything you do for the community and your knowledge of institutions and rating agencies and all that stuff. And of course, Jeff, you know how the sausage is made like no other, which is incredible. Thank you.
Thanks, everybody.
Hope that didn't come out the wrong way, by the way.
It did. It really did. It came out the wrong way, dude.
But Jeff,